Greetings traders, this is Timothy Hellberg, professional trader since 12 years back, and today I'm bringing you a market report for week number 12 of year 2022 in collaboration with IMGFX, the people's broker. Let's jump right into it because we got quite a few of things to run through pretty much. The agenda for today will be that we will go through the economical calendar for the upcoming week. We'll run through the market sentiment. So what is market sentiment and why does it matter? We'll talk about Bitcoin and also look quickly at Ethereum because it's showing some promise too. We'll look at gold. We'll look at NOK versus the Japanese yen, and we'll look at Australian dollar against the Japanese yen as trade setups. So with that said, let's jump right into it. But before we do, let's just mention that this is not a recommendation to buy or sell or do anything. It's just a market run through with the view of a professional trader and my take on how I will tackle the upcoming week and the market events that we are seeing around us. So let's jump right into it then. If we look at the economical calendar for next week, it's a pretty thin calendar, so let's not spend too much time on it. Monday we don't have too much. We have Fed Chair Powell speaking, which is his first speech after the last week's FOMC. So worth keeping an eye on, but don't necessarily have to be anything market moving. Tuesday, not much of interest. Wednesday, we got CPI for the pound, together with some other pound news and Chair Powell speaking again. So, as mentioned before in these market up reports, if you're trading the pound, if you're trading the dollar, keep an eye out on these ones. If you're not trading the pound or the dollar, then don't expect this to be anything market moving in terms of general sentiment or risk mood. Thursday, we got some German news which could move the euro, and we got the policy rate for the Swissy, which if you are trading the Swiss franc, always keep an eye out on this, because the Swiss central bank has been notorious for doing, for the lack of a better word, sketchy things in the market where they surprise the market. If you don't know what I'm talking about, just Google Swiss peg 2015 and you will see what I'm talking about. Friday, pretty much nothing worth keeping an eye out on that. So that's the economical calendar, very thin, not much scheduled, so it will be more headline driven this week. Next up, let's talk about market sentiment. And so what is market sentiment and why does it matter? So if we, for example, take a look at the VIX. The VIX is a volatility index, which measures volatility in the markets, which basically measures fear in the markets. The more fear you have in the market, the higher the VIX goes. So usually the VIX stays in this range. The VIX stays in this range that you can see here. So you usually go on a lower time frame. Market sentiment is something that pretty much any professional trader that is not using a quantitative strategy, they look at market sentiment. If you don't understand market sentiment, you will always be surprised by certain market moves, because what market sentiment is pretty much that the market has a bias. It looks at something in the market, so the market wants to be bullish or the market wants to be bearish. So with that said, that means that any kind of news or events that happen in the direction that the market has a bias for will be overinterpreted, while any kind of news or headlines or whatever that happens against the bias can have the possibility of being brushed off. So with that said, you can take a look at for example the VIX, but you can also look at risk currencies, you can look at equity markets, things like that. So that's why it matters, because sentiment is what drives the general tone of the market. So we've had risk, we either have risk on or we have risk off. So risk on means that the market wants to take on risk. You see risk assets rallying, for example, equity markets moving up, while risk off means that the market is scared of something and you see markets moving down. In, for example, equity markets, you see markets like, for example, gold moving up. So naturally, with the Russia-Ukraine crisis that we've had, supply chain issues after COVID, everything like that, we've had risk off for quite a while. But the last week that we saw risk starting to change a little bit. The market started to get a positive focus. We started seeing news out of the Russia-Ukraine conflict that were supportive of this. There were talks about, a deal between the two countries. There were talks about ceasefires. There were talks about partial removal of troops from Russia, etc. All of this, the market just loved and gobbled up. And as a effect of that, if you go on a lower time frame, you can see that the VIX started selling off, basically meaning that volatility were dying down because the market was losing fear. It was getting more confident and more positive. The market wants higher at this point in time. The risk sentiment is starting to turn positive. I think this will continue for at least a day or two. So keep an eye out for the next 24 to 48 hours, depending on what kind of market news we get at open. So we have one big issue, or actually two big issues that still can affect the market negatively, and obviously that's the Russia-Ukraine war. Any kind of bad news out of that will affect the risk tone negatively. And also we have seen COVID starting to pop up again over in China. Now at this point in time, the market really wants to move on from COVID, so it hasn't really focused that much on the news coming out of China. But if it gets big enough in China that the market can't neglect it anymore, and it starts affecting productivity and everything coming out of China, then obviously the market can't keep an blind eye out for it. So those are the two risks for the sentiment at this point in time. If we don't get that, the market is coming off last week's FOMC that we spoke about. The dot plot came in higher than expected, so that was very bullish for the market. The market took this as positively. Additionally to that, the Fed finally raised rates. They're going to continue raising rates, and quite a big one is that, as I've spoken about before, China and Russia, they are buddies. They like each other. So everybody's been scared about what will China do in terms of this Russia-Ukraine war. But China has a very strict China first policy. So China will always do what is best for China. And in this specific example, what is becoming very clear is that what's best for China is not a war. So they have not been very supportive of Russia. They have actually sided with Ukraine, not necessarily because they care about the Ukraine, but because they need to be aligned with what the rest of the world is doing on a whole. So, because that's what's best for China, and obviously that's not good for Russia. But this could also mean that everything is working against Russia in this war. And from a humanitarian point of view, we could see a fix in a slowdown in violence, and a pullback by Russia would be great. So next up, we'll look a little bit at Bitcoin. So Bitcoin is obviously a chart that we've spoken a lot about before. If you go on the higher time frames, you can see that we have bounced really nicely off the lower trends in the channel, we are seeing higher lows being posted, but not yet really higher highs. So it's not really there yet. However, you could argue that we are making a little bit of a triangle on the lower time frame. But I personally, with the way that risk mood has been improving lately, I would not be too opposed to start building up longs of this support here. I like that view, especially if we go onto the Ethereum chart. Looking at that, we actually have an even more compelling chart than the Bitcoin chart. So we have this support of higher lows moving upwards, and we are looking to make the first higher high, breaking this top right here. But we are also putting in this triangle, this wedge on the lower time frame, and we're broken out of it. So looking at Ethereum, the chart is really telling me that we could be moving up to this level here using a trend-based Fibonacci. So I like being long crypto at this point in time, as long as the risk sentiment stays the same. If it doesn't, then obviously it's too early to start building crypto longs, but I think there's a good case for both Ethereum and Bitcoin to start moving higher. Okay, so next up, let's look at gold. So gold, we had this head and shoulder pattern forming, and it actually turned out pretty nicely. We broke out of it and started moving lower on the 1 hour time frame. Moved all the way down to this previously highlighted support zone and bounced quite specifically on the dot of it. So, you know, gold is in an interesting place for me. So, as I've spoken about before, I still see gold higher. I think there's a good case for gold going higher. I am looking to start building gold longs because I think this recent pullback that we have seen in gold going down here has more been based on, you know, the market sentiment shifting into a more positive one, and people taking profits off of this pretty insane gold run. That doesn't mean that gold can't start pushing higher again. So as I've spoken about before, there is still a case looking at inflation on why gold could move higher, but also from a currency perspective. With the sanctions that have been put on Russia, there has been an indirect long-term effect on the US dollar losing more ground as a reserve currency for the world, because Russia still has to do business. So they are looking at more alternative measures, as China has done for a very long time. So looking at that, and for many other reasons that we don't really have time to go through now, the US dollar is starting to lose its place as a reserve currency of the world. And the reserve currency of the world meaning is that when you do international transactions, they're done in, for example, US dollars. It's the dominant currency to do international transactions, and it's losing that status. So with that weakening of the US dollar, that would push up gold prices. Add to that, you know, some would say, well, the Fed is hiking rates. We have seen the dot plot, which is bullish, and they are pricing in 7 rate hikes. Well, wouldn't that mean that gold should go down? No, because the case is this, that as long as the dot plot revised its inflation forecast to 4.1 to 4.7%, which is much
larger than what the actual rate, the federal funds rate will be, which should be at around 1.9% with the new hikes. There is still such a big difference in inflation and the actual interest rate in the United States, and that is that big difference in inflation versus the actual Fed funds rate is what tells you that gold still has potential for much more upside in the long term. So From a trend perspective, a long-term trading perspective, I think there's still a strong case to move higher in gold. I wouldn't mind starting to build longs from this level here with stops against the support here. Next up, let's look at NOK yen. So this is the Norwegian crown against the Japanese yen. And this is an interesting one, because the NOK used to be correlated to oil, but because Norway is a big oil producer, obviously. So, but this correlation, when oil took such a big dump, you will probably remember that oil even went negative for a while. That correlation broke. And the NOK started moving in another direction and become more of a cyclical currency rather than just a commodity currency. And looking at the higher time frame, we have broken out of this range pretty hard. So the trade was really last week on NOK, but I still think we could reach the highs here at 1380, and from anywhere up to 1380. I loved long NOK yen. So depending on what your strategy would be, I would look to trade any pullbacks in NOK yen to the upside. So whether it be momentum driven, whether it be you look for divergence, whether it be trade flags, whatever, I would look for long signals in NOK yen. AUD yen is a little bit of the same thing, because all of the commodity currencies like Aussie, Kiwi, etc., they used to be very heavily risk correlated, and it seems like the whole sentiment for that has shifted into the need for commodities in the world instead of them being risk correlated. So obviously the risk sentiment changing is supportive of this one too, but I just don't see a case for shorting any commodity currencies at this point in time. We've already broken out in AUD yen too, so once again, if you could grab that trade last week, that's a great one. But I still think we have a decent run up to the 90.33 area in AUD yen, so it's the same thing as with the NOK. Look for long triggers on the lower time frames, whether it be momentum driven, whether it be chart pattern driven, depending on what kind of trading strategy you have. I would look for pullbacks that give me some kind of trigger with bullish divergence on the lower time frames, and that would be my entries, preferably looking at MACD and RSI. So I think this can reach 90.33 in the near future, and basically all commodity currencies is the matter of get on the bus or get out of the way. I don't think that anybody should really be shorting commodity currencies at this point in time. Additionally, the yen is a safe haven currency, but Japan is such a big net importer. They need to import so much for their economy to stay afloat, that when they do that, now the need for commodities from a country like Australia is so high that they need to import so much goods that they need to sell so much yen in the markets, especially against, for example, the Australian dollar. So that is also why I like AUD yen, because you're looking at a currency pair where the Australian dollar, a good country, has a huge demand for its goods, and Japan, in this case bad country, has to sell so much of their currency in order to import and pay for their imports. So this is a trade that has strong macro based trade on, and you just need to find that lower time frame triggers. That's it for me for this week. Hit the like button, subscribe to the channel, leave a comment if you have anything that you're wondering. I'll be happy to answer it. If you have any input on any trades you've taken that we've gone through previously, or any questions, I will gladly answer them. If not, I hope you all have a green and profitable week, and I'll be back next week with a new update. Take care, guys.